Wall Street saw a strong rally on Wednesday as investors focused on the Federal Reserve's latest economic projections, despite signs of higher inflation and slower growth. The Fed left interest rates unchanged, a widely expected decision, but the latest projections indicated policymakers are now anticipating lower growth and higher inflation. While the median forecast still suggests 2 rate cuts this year, the underlying dot plot moved closer to signaling just one. However, investors largely ignored this shift, focusing instead on Fed Chair Jerome Powell's view that tariff-driven inflation will be transitory and largely confined to this year. Here are the key market moves. The Nasdaq led gains with a 1.4% rally, while all 10 sectors of the S&P 500 closed in the green. Treasury yields fell sharply, with the short end dropping by as much as 6 basis points. The dollar index paired gains after Powell's comments, while gold surged 0.5%, reaching a new high of $3,052 per ounce. In Turkey, stocks fell nearly 6%, and the lira dropped 14% before closing 7% lower after authorities detained President Erdogan's main political rival. The broader economic outlook remains uncertain. The Bank of Japan kept its policy unchanged, hinting at a cautious approach to rate hikes. Meanwhile, US President Donald Trump and Ukrainian President Volodymyr Zelensky agreed to work together on a peace deal to end the war with Russia. Inflation expectations remain a key concern for the Federation. Consumer inflation surveys have shown conflicting signals. Some suggest rising concerns, while market-based measures indicate inflation expectations remain stable. Powell dismissed the recent University of Michigan survey showing a surge in inflation expectations as an outlier, emphasizing that long-term expectations remain well anchored. Looking ahead, several key economic reports could move markets tomorrow, including US jobless claims, New Zealand GDP data, and a Bank of England policy decision. Investors will also be watching remarks from ECB President Christine Lagarde and other central bank officials for further clues on global monetary policy.